A market crash is coming. Will you be ready? We have a great training on that. We put it out last week to all of our subscribers. If you are not a subscriber to chartingwealth.com, become one. We will share that special training with you. If you're already a subscriber, it'll be in your show notes today. So check the show notes out. If you get our email, our daily market review 4 days a week and once a week, our comprehensive review and forecast, which is a weekly review. All of that stuff comes to you for free every day, loaded with all sorts of things, such as our daily market worksheet, trade worksheet, weekly market worksheet, links to all sorts of other things, a discount if you want to subscribe to TC2000, which is the paid version of freestockcharts.com. The charts that you see on the screen right now for those who are watching the video, and in fact, those listening to the audio podcast, thank you for making us like in the top 4 in the world as far as stock market, stock trading, stock charting podcasts. Thank you so much. It's what we're using to bring you that broadcast. And again, free versions available. We have actually in the show notes, you can get the actual outline that we use here every day. We have that setting already set up for you. And if you subscribe, you get $25 off of TC2000, the absolute, I believe, best charting software. It's actually not even software. It is web-based, and it is incredible. No matter where you travel in the world, you can access this stuff. So I love it. And in fact, know the founder, the owner, Chris Warden, Warden Brothers. They are fabulous. Great guys. So let's jump into these markets. What do we see going on? We see exactly what we hoped would happen, what we've been talking about. Stocks, that is the S&P 500. The Q's up the most for the day. We see bonds down and we see gold down, which is beautiful because we had a weekly vertical crossover going down. And what do we have forming? A down candle. Do these always work? No, they don't. They don't. That's what makes the market fun. If everything always worked, there wouldn't be anything to it. It'd be no challenge, would it? Well, our weekly vertical crossovers do, though, particularly when you look at gold and go back in time and look at our crossovers. They work again and again and again. If you have friends that are interested in gold, why don't you ask them to follow us every day? Say, hey man, you like gold? You want to know what gold's doing? When you might want to think about buying gold? When you might want to think about selling gold? Now again, we're not a stock calling service. We're an education firm. Ask them to study with us and then apply all the stuff they've already learned to gold and then see if this doesn't help, okay? If it doesn't help a lot. Now, again, we do everything we do as long as it works, and everything changes over time. We've got quant computing, we've got dark pools, we've got all sorts of stuff that is driving markets in weird and crazy directions. So the stuff that we do can change. It can stop working. I do like to rack up the victories, but I am the first to tell you that the problem you can always run into is stuff changes, markets change, and we'll do what we do as long as it works. And so far, it's been working quite well. I encourage you to join us every day. If you really want to know how this works, it's not tuning in once a week, twice a month, 3 times a week. It's being with us 5 times a week. It's making sure that every day you pay attention to what's going on. Need to check the market a couple of times a day. When you've got trades going, you particularly need to do that. Now, we're not talking about day trading, like you staying at home in your pajamas and trading all day long. We're talking about you learning how to read these charts. And remember, the bigger the chart, the bigger the money. We're talking about when you look at crossovers going on for many days or weeks at a time, you're talking about huge climbs in the dollar amount. So we're not talking about a nickel, a dime, those kinds of things. We're talking about massive movements. That's why we want you to practice with us, learn how these charts work. We've honed everything down, making it as simple as possible, but you've got to practice it. You've got to. If you don't do that and you think you're just going to play the Casino Royale, you're going to get hammered. I can promise you that. Very few things I can promise you. I can promise you you'll get screwed. Okay, let's now start with the S&P 500. Up for the day, 0.16%. We see the price percent oscillator heading up. Derivative oscillator still losing a little bit of momentum. Nice big green up candle for the week. Of course, price movement is above the weekly trend line. We see something interesting when we go to the 2-day. What do we see? That 2-day chart has crossed over going up. We thought that might happen. We talked about it yesterday, but why didn't we mark it yesterday? Because the 2-day candle wasn't drawn. You never draw a new change until the candle is completely drawn. That's why we don't get halfway through a week, because we would be wrong again and again and again. Remember how we kept thinking for 3 weeks, was it 3 weeks or a month, that gold was going to cross over going down on the weekly chart? It did not do it. It steadfastly refused to do it. Then it finally did it. And again, you've got to wait for the candle to end. Well, the candle did end. We now have SPY, the S&P 500, moving up. The weekly's in a confirmed up move, and the 2-day is now in a confirmed up move, giving us an opportunity to start looking for a pullback on the 4-hour chart once it moves in the opposite direction and then crosses back over going up, if indeed it does, might give us a jumping in point. You might say, well, why not jump in now? Well, feel free to jump in at the top of any move, because that's more likely what you're going to do if you just jump in right away on that 4-hour chart after the 2-day vertical crossover. So that's why we wait. We're patient, we wait, we see what's going on, and then we make our intelligent move. So that's where we are as far as the S&P goes. We're in the territory to start waiting for a pullback on the 4-hour chart and then jumping in. Remember, hogs get slaughtered, so you don't want to be greedy. You want to be patient, and you want to follow established trends and follow the rules. People say, why do you follow the rules? Because the rules work. Okay, let's go on to the Qs. What do we see going on there? Well, we have a nice big green up candle, even with the wick on top of the candle ending the 22nd of March. We're decently above that so far for the week. Derivative oscillators gaining upward momentum, which is nice. Price percent oscillator is heading up. Go to the 2-day chart. What do we see? That latest 2-day candle, nice. After sort of a sideways slide, it's bumped up quite nicely, pushing just above the Bollinger Bands. That's going to be stretching out volatility. Price percent oscillator heading up, derivative oscillator heading up. And we go to the 4-hour chart. Those of you who jumped into the trade after the crossover in the morning on Monday, jumped in around noon or so, you've seen some nice appreciation. We are, again, just sort of pay attention. We have a little bit of a blowing off there in the afternoon, red open box candle, but then could just be digesting gains and all, but keep that in mind. Derivative oscillator lost a little bit of momentum. Price percent oscillator not heading up at the steep, super steep angle it was, but still heading up nicely. So pay attention. Remember, after you enter a trade, what you're primarily paying attention to are those 2-day charts and those weekly charts, which are still looking strong, getting longer in the tooth as every week moves along, but still moving up. So all the charts, all the time, pay attention to the trend lines, making sure price movement stays above them. When you start violating various things, the 4-hour rolls over, the 2-day trend line's broken, the weekly trend line's broken, the 2-day chart rolls over. Those are warning bells. The more of those that go off, they tend to show you that a trend might be coming to an end, and you might wish to take your profit and walk away. Again, that's why we train every day, to be able to recognize those things. And people say, well, what should I do? What exactly should I do? Every single chart is different. Every single ETF has its own personality. They're like different people. And they're like different people at different times of the day. Sometimes they're grumpy, sometimes they're happy. Sometimes they go through periods of depression or elation. That's why you've got to follow these things and be able to read them And that's why we practice every day. So we continue to move along. What do we see going on 20-year bonds? Well, we see a pullback. Stocks have been going up quite nicely. And of course, bonds, consequently, typically what you would expect, have pulled back somewhat. We don't have a red down candle yet, but we have sort of a open box red spinning top, a pullback. Bonds were down for the day 0.87%. Derivative oscillator still gaining a little bit of momentum for the week. Price percent oscillator heading down. Price movement is above the weekly trend line. So we'll continue to pay attention to that. What do we see on the 2-day chart? Heading down, hasn't crossed over yet, but that latest 2-day candle, a decent size solid red down candle after a red spinning top, meaning indecision, tending down, push through the 2-day trend line, still well above the weekly, but moving down. And we go from the 2-day to the 4-hour, and of course it's continuing to trundle down. Now, as long as the weekly and the 2-day are still in confirmed up moves, if this turns around over the next couple of days or the next week and starts heading up, you might have a jumping in point. So again, we keep all options open here. We don't rule anything out. Why? Because the charts lead us. You can fill the news in later. As I said earlier this week, I thought this up. I thought it was pretty cool. I thought this up that, follow the charts, fill in the news later. The charts tell you where things are going. The news can always fool you. And sometimes the charts do too, but if you follow them on a daily basis, much, much less likely. What do we see going on gold? Well, gold, of course, has a weekly vertical crossover in effect. It just happened this last Friday, and we see a red down candle forming, derivative oscillator gaining downward momentum, price percent oscillator heading down. We go from the weekly to the 2-day, and we see that 2-day again continuing to spike down, derivative oscillator gaining downward momentum. We now have 6 days of down movement, which is nice. Again, the only thing that you get some warning signs over and you worry about, if you guys remember, we've sort of had gold bottom out around the 121 mark, something along those lines, 121, and we're in that zone. We want to watch. Pay attention to gold, see if it's going to be able to push through where it stopped before. If you notice, we have that 200 period moving average. You guys ask me all the time, why do you keep a 200 period and a 50 period moving average? Because sometimes they provide levels of resistance. And what do we see running across our chart? We see gold bouncing off that 200 period moving average line. We see it moving through it and then holding there, bouncing up, bouncing down, and now going down again. Will it penetrate or will it bounce off of it? Pay attention, my friends. If it starts to bounce off of it, you want to take what profits you have in that down trade and keep it, not lose it if it won't go through. Things don't always keep moving, okay? Keep that in mind. And when you find something where you see a floor, that's called a floor, that's called resistance, pay close attention to what's going on there. We do see the price percent oscillator, derivative oscillator gaining momentum on that 4-hour chart. But again, 2-day chart. What do we see on the 4-hour chart? That's where we start seeing things bottoming out. Now again, gold was down for the day 0.15%, down in the morning, a little up in the afternoon. Price percent oscillators flattening, derivative oscillators losing downward momentum. Pay close attention. Now again, the 4-hour chart is not your total trading chart here, but it's giving you information that you keep in mind while looking at the 2-day and the weekly and this 200 period moving average line, because 2 times previously it's been where price movement has stopped. So pay attention to it. Pay close attention to it. And of course, where will you have confidence? If price ends up blasting through that 200 period moving average line, it's probably going to keep going down. So let's watch, let's be smart, let's see what's going on. Folks, that's where we are. Our Q's trade continues in effect. Our gold trade continues in effect. Q's going up, gold going down. So good to have you with us. If you haven't purchased our book, do so. How do you do that? You simply, in the show notes, you can see them at the YouTube channel. You can see them at the website. just look at the show notes. You'll see a link to Charting Your Way to Wealth, our book that explains what it is we do here. It explains the price percent oscillator, derivative oscillator, trend lines, how to draw them, how to use them, the Bollinger Bands, the Heikin-Ashi candlesticks, you name it, it's all there. We also have lots of free training at the website. And again, if you want the special training video that we put out that's only available to subscribers, then just go to chartingwealth.com and sign up. And you will receive it in your show notes within a day. The minute you sign up, the minute you start getting it the next day. So we'll put it out over the next couple of days for everyone who subscribes. Easy to do. Purchase the book. We had a great training with our Patreon members. You want to be a real supporter of the channel, go sign up and be a Patreon member. We had a call-in training for them on entry and exit points, trend lines, all sorts of great stuff today, about 30-40 minutes. And appreciated all of our Patreon members for being there. And I will be working here over the next day or so to review the charts, the ETFs and stocks you wanted me to review with you. We'll be putting that special training out soon. Okay, my friends, that's it for the day. God bless you. If you have any questions, feel free to email us, cw@chartingwealth.com. If you live overseas and you want to buy our book, email us at chartingwealth.com. Tell us you want us to bill you. We'll send you a PayPal bill. Our other system, Squared Up, doesn't work for overseas billing. But email us. We'll send you a PayPal bill. You pay it. We'll ship your book out to you overseas. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.